Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get going, let's do a quick systems check. If you would, if you're hearing me clearly and seeing my screen all right, please type OK in the chat box. Just waiting on a few more responses. Please type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, please feel free to let me know. Good morning, Matthew. Welcome. Glad to see you in the webinar. Let's go ahead. So as always, keep in mind, no one trade is guaranteed to bring profits. Each and every trade you take has risk involved. So in one way or another, you should have a risk management plan to manage the amount of exposure, what kind of potential profits you're going after, etc. And we'll go over some ideas in that regard with our web trader and AvaTrade Go mobile app. It really makes it simple to go about doing a lot of the risk management pieces that really are part of a risk management plan. As we go forward, also keep in mind that what we cover is educational in nature and is not meant to be financial advisement. Obviously, the other side of the coin here with the risk is that each and every trade you take has a good potential for profits as well. So with that in mind, we go about looking at how can we go through some fundamental analysis to hopefully improve upon our ability to go after those potential profits with each trade. And real quick, before we get into the live articles and the charts to look at some live movements and some potential trade opportunities, let's mention what is fundamental analysis for those of you that might be new to things. Maybe you haven't attended the webinars before. Basically, fundamental analysis is what's happening around the world in the news and with economic reports, and it tends to create headwinds in one direction or another many days that lend some predictability to maybe movement of certain instruments on the charts. And so as we look at the economic calendar, which we'll do today, we'll see a general trend, an inflationary trend, that is, with data that's coming in from scheduled announcements. We call those regular economic events, whether they're PPI numbers or jobs numbers, etc. Those are scheduled for exact days and times for different nations around the world to report their economic data. And so those are easy to predict in terms of scope and timing, and lately seems to have been easy to predict in terms of the amount of inflation that a lot of the numbers have been showing. The other type of fundamental news would be extraordinary economic events, like potential war breaking out between Russia and Ukraine. You know, those sorts of things are not scheduled. They're not predictable necessarily. Who knows what the next headline might be regarding that particular situation. And in the past, it was headlines about Brexit or about COVID, etc. The focus seems to be less on COVID now and more on inflation and this situation between Russia and the Ukraine, and really between Russia and all of the NATO alliance is really what's at stake here. So as we move forward, we'll keep in mind that those types of fundamental news items will maybe play a role in which way you might choose to trade on different instruments as you look at the technical analysis and look for opportunistic spots to enter and to exit. As we go along, if you have any questions, any input you want to give, please feel free to ask at any time in the chat box or to give information in the chat box that might be pertinent to what we're talking about. Now, before we log into the AvaTrade Go app, which I've got mirrored down here in the bottom right corner of the screen, I'll maximize that view soon. Before we do that, and before we go into the web trader platform, which you access from logging in here in the upper right, what we can do is take a look at what are some of the big headlines right now that are out there. And we see this headline: European stocks mixed, investors digest Ukraine situation and corporate earnings. There are some corporate earnings coming out, some good, some bad. It's really not the main focus right now. A lot of investors are focused on what is happening with this Ukraine situation. And we see down here a little snapshot of what the markets are doing. Today, the futures are these two at the top, US 30, US 500 futures, and they're in the red. They've been in the red all day. And then we come down here and we look at the VIX volatility index. That's way up in the green. They were talking, what, 6% plus increase in the volatility index. And that basically is a measurement of fear on the markets. And so some refer to the volatility index as the fear index. Whichever way you want to call it, there's tension in the air. It's up over 6%. And then we're looking at the dollar index, which is also strengthening a bit. It's certainly not weakening. And usually when there's fear on the markets, the US dollar has a chance to strengthen as somewhat of a safe haven currency. So even with all that inflation fear out there on the US dollar, we still see a little bit of strengthening on the US dollar today with some fear hitting the futures market in the first half of the day. So that's an easy snapshot to get a feel, a read on things in terms of, if I'm looking at, I don't know, the Australian dollar, Japanese yen, I might say, okay, Australian dollar tends to drop when there's economic fear, and the yen tends to strengthen when there's fear because the yen is a safe haven currency. And so just in general, when I look at this type of situation, I might already have a fundamental preference in terms of certain instruments as I go into my technical analysis to say, okay, maybe I find the Australian JPY dip down onto a support level that I might want to buy from, as an example. If I believe that, it went up to a resistance level that I might want to sell from, if I believe that the Australian dollar should maybe weaken today with the economic fear, and maybe the yen should strengthen with that fear. And so I start to look for opportunistic entry points on instruments that I think I know what direction maybe they should go today based on the fundamental news. Okay, and by the way, your read on it doesn't have to be the same as mine. That's just an example, the Australian JPY, because those two instruments one tends to be weak when the other is strong, and vice versa. And so that tends to have really good price action when you pair a weak horse against a strong horse. All right, so and if you're wondering, the Australian dollar tends to strengthen with good economic outlook because they're a large exporter nation of things like iron ore and coal. And so when China is doing really well, you tend to have the Australian dollar want to strengthen. And if China's doing bad and the global economic environment is negative and there's fear, well, then the opposite. The Australian dollar tends to be a little bearish and the yen tends to strengthen. So just some general insight into how you might go about deciding what you want to trade on and in which direction, even before you look at the charts. Okay, so let's look at another headline. More of the same, right? Ukraine, Russia-backed rebels trade accusations of shelling across front line. So there aren't just troops just sitting there doing nothing necessarily. There's been some shelling going on, and there are some rebels that I guess are Russian-backed rebels, they say, that have been kind of fighting and at war really for some time, separate from this more recent alignment of troops along the Russia-Ukraine border. So that's going on, but this wasn't something new. The leader in Ukraine said it's nothing new, this shelling, that it's something that's been going on for some time, and it's separate from this latest buildup of troops. But still, that's not good when you have potential for war, and then you have reports about Russian-backed rebels potentially shelling areas in Ukraine. Then stocks stumble as Ukraine tensions worsen. Investors seek safety in bonds. You get the idea of the headlines here. And we could read that just by looking at this. Futures were red, volatility index is up, okay? We could tell that the headlines were probably going to be something like this. Stocks are starting to tumble, Ukraine tensions worsen, investors seek safety. There's fear on the markets. We can see it in a number of different indicators and headlines here. Now, we take a look at, this is yesterday's economic data that came in. Through the roof, again. Look at the signs of inflation that are out there. We've got CPI numbers coming in higher than expected out of Canada. That's the Consumer Pricing Index. Prices are going up faster than expected, and the expectation is already there for price increases because we know there's inflation, and it keeps outperforming and having even larger price increases, whether it's producer price index, the PPI, or the consumer pricing index, CPI, etc. Again and again, the numbers are coming in larger than expected in not just the U.S. but Canada and European Union, etc. Here on this industrial production greater than expected. Month over month, year over year in the EU. Out of the US, retail sales greater than expected. What do you think happens to prices when sales are higher than expected? They keep going up faster, right? And so while on one side, all this data usually is good news when there's more sales than expected and prices are going up rather than down, that shows demand and signs of a healthy economy. But when it's almost 10% increase year over year in the US on some of these prices, and even higher on certain items, then that's signs of not just healthy demand, but hyperinflation. And so that's the fear that's out there. So these large numbers, these data showing large CPI numbers, PPI numbers, etc. If we look at the day before, it was numbers out of the US showing like almost 10% year over year inflation. So all of that feeds into the fear that we're talking about. So there's not only fear about hyperinflation and increased interest rates coming soon, potentially in areas around the world, and for sure the U.S. has talked about raising interest rates multiple times this year to try and slow down inflation, which, by the way, tends to strengthen the currency. It's why maybe we see a strengthening of the U.S. dollar this past few weeks with the anticipation that interest rates are going up. Which, as you strengthen the currency with higher interest rates, that slows inflation. It stops prices from going up so fast. And so that's the idea, but that also could put a strain on the economy. If all of a sudden it costs more to borrow money, interest rates are higher, all of a sudden people can't afford as large of prices on houses, so house prices don't go up as fast, can't buy cars as easy because interest rate loans are higher, etc. It slows the inflation down. People can't buy stuff as much at high prices, but then it also starts to hurt people as well. So it's a balancing act to try and get rid of this hyperinflation by raising interest rates and cutting back on stimulus measures, but also to not damage the economy while doing it. Many would say that, at least in some areas of the world, that they waited too long to start increasing interest rates. They let the hyperinflation creep in too much. And that could be true. Now, as we move forward, let's first look at the app. And I'll just give a full screen view of my phone here. And so when you log into the AvaTrade Go mobile app, there are a number of features that help you both with your fundamental analysis, which we're talking about now, and your technical analysis to go along with your fundamental analysis. Matthew, no, in general, inflation tends to cause currencies to weaken. What's been causing the US dollar to strengthen, many believe, is the idea that soon interest rates will go up to try and stop the inflation. So usually inflationary numbers, currency weakens, right? But as the fear comes in that, hey, the U.S. is going to raise interest rates 0.5% soon, even more than that through the year, multiple times. Then people are anticipating before it happens that the interest rate will go up. Therefore, they start buying the dollar while it's cheap, anticipating that it will strengthen, so thinking that's a good investment. So they're buying before it happens. Okay? So buy the rumor, sell the fact. I'm not saying you should do that, but that's what happens a lot of times. Rumor is interest rates will go up. They're buying the dollar before they go up to get in while it's cheap. Up goes the value of the USD as everyone starts buying, right? Now the price is cooked in. Maybe when the interest rate goes up, you might not see a sharp spike at the time they raise it, if they raise it the amount that everyone already anticipated they will, because the strengthening of the USD is already happening. But perhaps they raise it more than expected, and then you get even more strengthening of the currency. It's not 100% relationship all the time, but that's the general idea. Higher interest rates tends to add value to the currency because it becomes more expensive to borrow it. So it makes it more valuable. Now, as we look at the app, if I tap on this little tab down here in the lower right, these three little lines, I get a menu. And in this menu, Market Buzz gives you fundamental news on stocks, primarily stocks. I don't think I've ever seen anything other than stocks in the Market Buzz, but let's look at it. There are a lot of stocks that we offer, and so you may be interested in trading on them, not just the most common ones, Tesla, Google, Amazon, but we have lots of other stocks as well, especially on our MT5 platform. And so let me just go back. Looks like it didn't load. Oh, there it goes. Now it loaded. So the ones that are trending the most are at the top, and the ones that are trending less are at the bottom. So we see Splunk, Standard Chartered, etc. Let me go back and tap on it one more time. My phone connection might be a little weak. Wasn't exactly loading everything. Okay, there we are. So we see news volume, 1,914 articles on this particular stock that we offer. And you might not have ever heard of that, but it's available on our MT5. And you might say, well, why all of a sudden is there an explosion of articles on that stock? And so if you want to read what's going on with it, you tap on it. Okay, I tap on it. It brings up maybe the expected direction of movement, the expected percent change. And then as you scroll, you see articles that are coming in on it, time-stamped. Okay, here's the first 100 results. And so we see the most recent article to come in is here 30 minutes ago. Another one 30 minutes ago. And so you can tap on the articles, and each one of these has something to do with that stock. And so you don't have to spend time searching for the information. It's organized here for you here. It's like a big web crawler. It pulls up from many, many reputable places articles about whichever stock you choose to look at. Okay, so that's one way to do fundamental analysis on stocks right from the app, and it saves a ton of time to find information on particular stocks. Now, let's consider the fact that we just took in some fundamental perspective before we even got into the app. And you might already know, okay, I got an idea what's happening with the market. There's a lot of fear. The safe havens maybe are strengthening a bit, like the yen, the USD, the Swiss franc, and maybe the currencies that tend to do well when there's not fear on the economy, like the Australian dollar. Maybe those are weaker today. And so we could start looking to see, are there any signals coming in that might match my perspective? And so I can scroll through the app and look for either under featured ideas or analyst views. Let's tap on analyst views. We have free signals coming in with the technical analysis done for you. So you don't have to take the time to try and find the support and resistance levels. They're drawn for you. Where you might enter, where you might put your stop loss, where you might take profit, the preferred direction and alternate direction, etc. Okay, so we see there are cryptocurrencies in here as well as standard currency pairings. We see Ripple expected to drop against the US dollar today. Makes sense, right? If the US dollar is strengthening and there's fear, people leave the riskier instruments a lot of times when there's fear. And, cryptocurrencies in general are considered maybe more risky instruments. And so if people are selling out of the cryptocurrencies to buy into bonds or something else, then it makes sense that Ripple or some of these others might drop against the US dollar. We see US dollar expected to rise against the Turkish lira, up against the Singapore dollar, up against most everything we're looking at, Russian ruble. We see one that stands out as being a little different, New Zealand up against USD. So some of these you might say, nah, it doesn't align with what I think will happen today. So some of these signals you might choose to say, okay, I don't want to get involved with that signal because it doesn't make sense to me in terms of the fundamental review that you just did. So as we look here, if there are tensions between Ukraine and Russia building again, oil prices were pushing up with that tension because there's a fear that there'll be a disruption of energy supply. And so if there's a disruption of energy supply, that tends to drive crude oil prices up. And so it might make sense that the Canadian dollar could be stronger today. And so you might look for signals. This shows the Canadian dollar weakening against the NZD. in the signal, you might look and see if maybe it's at a high point now that you might think the Canadian dollar could strengthen if oil is climbing today. So we see a ton of signals. We can analyze any of these that we think might play into our hands, okay? And so let's go ahead and leave that area. I'm going to leave the app for now, and all of the other features that I show you in the web trade are also in the app, okay? The risk management features in the order window, Ava Protect, etc. They're all available in the app and our web trader platform. So let's go ahead. We'll log in here on the website, and that takes you to the web trader platform. I let it sit too long; it timed out. So let me go back and log in. This is my test trader dummy account, and there we are. So very simple to log in. There's the platform. You can switch between your accounts right here: real account, demo account, MT4, MT5, all in one place. You can trade on all of those accounts right here from the web trader and from your mobile app. So maybe we take a look at something that might make sense to you. Like this, just by chance, I had this up from the last webinar, Australian Canadian. And why might we think about pairing that together? You might say, well, with the fear out there, maybe crude oil's pushing up. And if crude oil's pushing up, maybe that strengthens the Canadian dollar because that's the #1 export of Canada, huge part of their GDP, crude oil. So if the price goes up, that tends to strengthen the Canadian. And then if there's fear economically out there, then the Australian dollar may weaken because as the economy goes, many times so goes the Australian dollar. So that's something we could look at, but maybe we start at crude oil and see what is happening with crude oil. And I see the request for the US 500 and gold, so we'll look at those next as well. Let's take a look at crude oil, see what's happening with these latest Ukraine-Russia fears. See if we can find an advantageous entry point. There's 1 hour candles. Let's go a little bigger view, 4 hour candles. Let's go 1 day. Okay, 1 day candles. Let me get rid of some of these old lines I drew. Very simple to get rid of the lines. Just click and hit the trash can. Okay, this line I like. That's a support line on the 1 day candles. Old resistance here, resistance, resistance, resistance becomes support, 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 up. This was the latest push down as there were reports that Russia was pulling troops away from the Ukraine border, and the fear went away, and the markets were rising. And so the thought that there won't be a disruption in energy supply and in that area, and so then crude oil came back down. And then now the fears again that, hey, there's still bad tensions between Ukraine and Russia, and you see crude oil trying to climb back up now. And you see it spiked and pulled back down today. So that could be an advantageous entry point if you think that crude oil is going to push up towards the high it was already at right up here. Okay, and we don't even have to go to the all-time high for not all-time, but the recent high at the top of this wick. We can just go at the top maybe of the base of these candles, right at about 95. Okay, so with that type of setup, we could say fundamentally it makes sense crude oil could go up. So we say buy position. Take profit, we say up here at 95. It doesn't even have to break the recent high. Certainly not the all-time high. I didn't mean to say that. Stop loss. This is our support level, so 88.5. It would have to break this support to hit 88.5. So 88.5. All right, so we look at it and we say, okay, we've got larger possible profit than risk. Okay, almost 1-to-1, but a little better profit than risk. And I've got plenty of room to be patient if crude oil does push down a little. A nice support level, and I'm below that support level. It would have to break it in order to hit my stop loss, and I only need it to go to a high that it was at recently. And it went to that high when there were fears about Ukraine-Russia war, and now those fears seem to be back today. So the fundamentals are on the side of maybe a buy position here. So I'll simulate that position. And so now we've got stop loss right down here. Okay, 88.5, just below that support. And we've got take profit up here, 95, just before the major resistance up there. Okay, so be interesting to see how something like that would play out. But that trade is both a technical analysis type trade, but it's also a fundamental trade. But, you know, it's more of an art than a science, right? Because you might view the situation between Ukraine and Russia different. You might say, oh, it's a bunch of saber rattling. There's not going to be any war. And by tomorrow, the fear will drop again. And then down will go oil, maybe. And if that's your view, then you certainly wouldn't be taking the buy position here. So you have to read the tea leaves yourself, look at the fundamental news, and interpret it as you see it. And then you take the trade accordingly. Now, in this case, if you feel that it's going to go up, you can get your stop loss below this support level and risk less than the potential profit when you're taking profit even before the resistance level. So, and the stop loss you wouldn't have to put down here. You could put below this wick here, and you'd be risking even less. And you'd say, okay, it shouldn't break this low point from yesterday if indeed it's real fear. And so then you don't even have to risk down to there. You could risk only up to right about there, 89.55, something like that. So now you have an even better potential profit to risk ratio. So if that's what you want to do, 89.55, now I can go back to this trade and I can modify it. I can put my stop loss 89.55. It's no problem. After the trade's running, you can modify it, update. Now my stop loss is even at a spot where I'm risking maybe only half of my potential profit or something much less than I was when I had my stop loss down here. And I'm still below a nice support level on these one-day candles here. So that's fine tuning your stop loss mark and your exit point for take profit. It's kind of an art. It's not necessarily a science. There's no one right way or location to do it. Now, the request was for gold and S&P 500. So let's look at gold. And let's pretend you wanted to sell on gold. With the USD strengthening potentially today with some fear, the fear is not inflationary fear right now. It's fear of potential war and fear of interest rates going up, which is an anti-inflationary move. So a strengthening US dollar with anti-inflationary fear out there because of the high inflation. There's anti-inflationary fear of higher interest rates coming. So kind of bizarre world where high inflation, usually gold goes up as a safe haven from inflation. Because there's fear of interest rates increasing. When we see the high inflation, it solidifies in people's minds that, hey, interest rates will go up. And so then gold maybe sells off with those high inflation numbers with the expectation of high interest rates to come soon. So let's expand this chart. Let's take a look at what we see with gold on the one-day candles. We see it's gone running up with the high inflation data. And if we look at 1 week candles, we can see it's neared a resistance level up here. Okay, we see there was resistance in this area. It did spike here, but this was a resistance area for a day, spiked and right back down. And then it came up here to that price level and dropped again. And now we're approaching the 917 area. We're nearing 1900 anyways right here. So if you think fear will dominate, US dollar will strengthen with more and more realization that interest rates are going to go up in the US, if that's your belief, then you would be shorting gold right now with your stop loss maybe up above this resistance level here. Up above 1900, maybe up above this top of this wick, which would be maybe 1920. Okay? And so that's more of maybe a longer term move, because that's nearly $30 away, not quite, $26 away in the price of gold to your stop loss if you put it up here at 1920. And actually, it's $36 away approximately to stop loss if you put it at 19.20 from the current price. But your potential profit, if gold comes down to these support levels down here, is much greater. We're talking $100 per ounce drop to the support levels down here that are drawn. So we can get rid of this one. We can get rid of these. And we can see down here, support, 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 and then the most recent run up right here. Okay, in these 3 days, we went up $100 an ounce in these 3 days, $100 an ounce climb. We're $20 or so from a resistance level. So if you think fear is coming and strengthening of the USD, then the move would be sell. And in that case, you'd take profit, maybe down here at 17.90. Stop loss, maybe at 19.20 above that resistance level. Okay, that gives you potential profit, what, 3 times or so greater than the possible loss. Let's say I'm willing to risk 500, whatever it is, my risk management plan, I've decided I want to risk, that now I change the trade size. There's a quarter of a lot, that would risk 885, so it's a little large, right? There's 0.2 lots, would risk 700 or so. 0.15 risks 532, 0.14 risks 497. So you see that the platform and our app calculates your exposure for you in the order window. So now I know, okay, 0.14 lot size gives me a possible loss to my stop loss price of about 500 and potential profit to my take profit of about 1300 plus. And then if I wanted, I could put AvaProtect. I could protect it for a couple days or by the hour if I wish to for a small premium cost. Okay, protect it by the hour, by the day, in which case I might not need a stop loss, at least until the protection ends. The protection adds back any losses you might have on the trade during the covered time period. And if you have profits, you keep the profits. You just pay the premium cost up front, which you can see is much less than the stop loss cost. So instead of risking that it goes bad and I lose maybe 500, I can say I'll just take a payment now, a cost of 125, and now I'm risk-free after that for 2 days. If I believe the movement will happen in the next couple days, right? So it's about timing as well. If there was big news that I thought was coming today or tomorrow, this might be the way to go, AvaProtect. Okay, so you have that option as well on gold, silver, and FX pairings. So maybe I sell on this just with a stop loss without the AvaProtect. Maybe I don't think the movement's going to happen in the next couple days during the protected time period. Okay, so we've got a couple position examples open. US 500 we can put. That was requested. Hey, Matthew. Yeah, if you're looking at Fibonacci levels, you may see some levels that tell you some things as well. You can throw them on the charts in the web trader, take a look, and see if there's a price level that you think if it hits, then you think it'll run up further. Or if it reaches, maybe you think it'll act as resistance, and maybe that's the spot you'd want to come down from. And so your 1915 number is right on with the line I drew on gold. I said if you're at 1920, you're above that resistance. That's a Fibonacci level there. That's what you're saying. So you're seeing the same level I manually drew in the Fibonacci levels, which is a resistance / support level. So if you believe it's going to break through that level and you want to wait for confirmation that that happens, then you'd have a pending order above that to buy potentially. If you believe that will act as resistance, then you can either wait until it gets closer to sell, or you could do a sell now like we demonstrated, okay? Because there's no guarantee it'll get to that 1915 before dropping if it's going to drop, right? So maybe you do a combination move as well. You could, if you believe gold will drop, you could drop now. You could sell half your trade size now in case it drops without going up there. And you could wait and have a pending order up closer to that resistance, 1915, in case it does go up there before dropping potentially. And we keep talking about dropping. It very well could blow through and keep climbing, right? So risk management. That's why I'm showing you how to do risk management here. You go the direction that you think the fundamental news tells you it should go, but you also do risk management because there's no guarantee, obviously. Or else we'd all make millions and millions of dollars all the time with our Forex trading, which we know it's not that easy. You have to have a plan and risk management, and then you have a greater likelihood of success. Okay, so US 500 I've got down here. Let's expand it. We see it's pushing down today. Not a surprise, right? There's fear on the markets. It's dropping. You could have been selling on this through the day today already. We see it's pushed down from this resistance level that we drew in the last webinar here. You see resistance, 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 and down it's come. And we're down here at 44.44. I see a support level. If I want to steal one of these lines, I see a support level here. Okay, right about, we could give or take a little bit there. Okay, this was resistance here, resistance, resistance. This was the breakthrough candle. It took momentum to get past this price. Something big happened here to cause enough momentum to get past this resistance level. And whatever it was that caused the market to climb past that resistance then made it become support. Support, support, and now here we are getting close to that support level. So if you're shorting the S&P 500 right now, you should understand that only about 20 points down from 44 to 24, 26 here, 44, 26, we've got a pretty major support level. So as this gets closer to this level, you could see some bouncing back up, okay? If you think the fear will subside in the markets right now. If you think it's temporary fear and Ukraine and Russia are going to work something out the next day, then maybe you have a pending order waiting down here on this support level. You could have a pending order down here to buy. That if it gets down to 44.30, then you buy from just above this support level here with a take profit back up here before the resistance level. But that's if you feel like the support level will hold, if there's not that much fear. And by the way, you don't have to guess. You could put a pending order to buy from the support level, and then you could put another pending order. If it breaks the support, you could have another pending order right here to sell. If it confirms a downtrend by breaking the support level, you saw how much momentum it had to break above that price level. Look at the size of the candle. It took a lot of momentum to break above this. So therefore, if it's going to break below that price, it could have a similar candle in the opposite direction as this one was up. So if it breaks the support and hits your sell position pending order, you could see a plunge down, just as you saw a plunge up here. Okay, there's no guarantee, but that's what we see in the candles. Okay, so you could do a double move here without trying to be right, just trying to be smart. A lot of times trading's not about being right, it's about being smart. So you could have a pending order to buy from, say, 44.30 with your stop loss just below that down here at 44.20. If it breaks the support, you only lose a little. It stops the buy position, and have a pending order to sell at 44.20. So if it closes your buy, you get in on a sell in case it plunges down further. So pending order down here to sell, pending order above the support level to buy. Stop loss below it on the buy, stop loss back above that price level on the sell. Type OK if you understand that potential setup for the S&P 500. And if you're asking, well, why not sell on the S&P 500 now? If you'd have asked me that 5 hours ago, it might be different because the movement might have been up higher, right? Would have been up here at the resistance level. This would have been a great spot to sell from. This 2-hour candle, look where it was. This 2-hour candle, just 3 hours ago, we were up here. And the futures were red and the volatility index was up. All signs said sell. And this would have been the spot to sell from. Look how it plunged straight down. But now we're a little late on that movement. The time to sell was 3 hours ago when it was at the resistance level. Now we're almost to the support level. So it's a little bit different situation. All right, everybody. I think we'll stop here if there aren't any more questions. We've done kind of a mix of things here with the commodities We talked a little bit about crypto and what you could expect with a strengthening U.S. dollar if that happens. And we looked at the S&P 500 and some other things. So I don't want to overload you with which instruments necessarily you could trade on, because you could trade on a ton of different instruments. The idea here is there is fear on the markets. Take your read on whichever instrument you plan to trade on as to what effect that will have on the instrument you want to trade, and then look for the entry points. Like I said, had this S&P 500 been where it was 3 hours ago, we'd have simulated probably selling with your stop loss above this resistance level, but it already dropped off of that. So a lot of it's about timing as well, right? Okay, everybody, thank you for joining. Good luck with your trading the rest of the day, and we'll be back at it. I'll be back at it next Tuesday evening, 6 p.m. UK time, for my next live session. All right, bye for now.